So let's start. Let's register here also. Okay, hi everyone. Welcome to today's interview with Andrus Oks, who is the founding partner of Tera Ventures from Estonia. We actually look forward to hearing from him what is the updates about the Estonian investment area and also startups. And Ozan also will be asking new questions. And we are happy to welcome you both. Thank you very much. And Ozan and Andrus, stage is yours.
Thank you so much. Thanks, Andrus, for joining us in this freaking rainy Istanbul July. I just got a little delay because I was stuck in the car for like 15 minutes waiting for the rain to pass. And I said, okay, I'm not made of sugar, so I'll just go out and get wet a little, which is great. I hope the weather is fine over there, wherever you are. You seem to have not the Golden Gate Bridge behind you, but a different bridge. It's definitely not the Istanbul Bridge. Where's the picture from?
Brooklyn Bridge.
Okay, perfect. So apart from the weather, I hope you're feeling great in this midst of pandemic, protests, world is collapsing, zombies are coming. How do you see the 2020 happening? What would surprise you if something else happens? I think we don't have anything left, right?
I'm so happy to hear that your weather actually currently is worse than ours. So this is probably never happened. We have proper summer here. Yeah, it's nice and sunny. So, and yeah, obviously this pandemic has changed many things here, obviously. But one of my friends actually said that, well, the future historians, when they describe this current situation in 30 years or something, they will describe it as, well, humans before were testing those digital products and, well, the internet. And well, during this pandemic, well, the life actually moves online. So and I'm sure we've seen some of it now, like those video calls, but I mean, many things we can't even predict. So yeah, it's the future will be different and surely, well, very interesting as well. So, yeah.
I agree. When this pandemic started, it's funny that you mentioned, one of the first things I did to keep sane is I started writing a utopian fiction talking about the world in 20 years, looking backwards into today and like making comparisons in what was there in 20 years after this period, people looking back here. And one of the few things that I was thinking about, I tried to look into it from that startup perspective as well. My top 3 areas that I visioned as a writer to be different were definitely education, definitely healthcare, definitely security, definitely entertainment. I mean, those 4 things had a major transformation towards digital in my pre-novel, I could call it. Do you agree, or do you have other sectors that you would add to the story?
Yeah, I mean, these are the obvious ones, but you can think further than that. So, well, one of the other obvious ones is that, well, I'm sure people in many industries are currently thinking that, okay, if the second wave or the next pandemic hits, I mean, can I be, well, fully automatic? Can I keep my factories open when, well, people are locked down? So, and well, for some factories this might be relatively easy actually, and well, it's, well, automation as such will bring other benefits anyways too. The other point I would make is that as we now interact much more with digital products, well, this relationship between humans and computers becomes much more, it needs to be more understanding from both sides, right? So it's human-computer interaction bit. So, for instance, one of my portfolio companies is well positioned in this world. They're called Realeyes. Yep. They can actually measure the emotional response from video feeds. And so they started from ad tech world, and they really built their capability there. And now they are expanding beyond that. So integrating to anything really, and testing the real experience. What are these emotions that are coming out of this experience and attention and stuff like that. So digital products will become much more immersive, for sure.
I agree. A different perspective is, I think, not many people have thought how culture will change this adoption pace, this acceleration of adoption. Like in Middle East, in Turkey, where almost all relationships are based on personal connection, and you cannot build trust without with people that you haven't met. Whereas I think, as far as I haven't been to Estonia yet, but the Nordic countries have a different perspective of how you can build trust. And I think this will create differences in how people are adapting into doing things digital, doing things online. Maybe we're going to be best friends with people we've never met in our lives. If you're Nordic, that seems okay. But if you're Turkish or Middle Eastern, that will be impossible. So there will be different cultural perspectives. And I know you primarily invest in Nordic countries, founders, but you also seen a lot of multiple cultural founders in different places. So do you see this culture playing a role in adoption?
It has an effect for sure, but I mean it's addressable. So, for instance, I closed the deal last week, and while we were actually considering it, we never met the guys. They actually are in New York anyway. So it's possible. So the other point, it's a concern certainly. So the way to address it is I've recently set up many more conversations with other investors. So I mean, if these guys have previously met these founders, they can vet them. They can tell me much about them from those from their local view on things. And I'm sure one of the effects of this COVID situation is that the syndication as such will happen much more syndicates, more various syndicates amongst investors.
So in a sense, the warm introduction and the connections between investors that are already been established will play a bigger role in closing deals.
And actually, like really looking into deals like jointly. I just this morning had a call with a Finnish investor, and we were actually three-way call. Me, a Finnish investor, and an Estonian startup. So yeah, it's like this. Yeah, I mean, this is actually more efficient as well. Otherwise, we would have double the calls, right? So,
yeah. And as far as I read, you did a first close on your new fund, and you're doing a second close. The first close is about 20 million, and you're going to close with 50. Do you think there'll be a difference in appetite in the LP side towards? You're not a new fund, so I think it's easier for the second funds. But the way I'd seen it is it will be difficult for first fund managers to raise and close during the COVID. How do you see that LP, GP structures playing out in this era?
I'm actually in the signing process for the second close, and that's quite special for various reasons, including top 5 Japanese corporation will actually join in the second close. So yeah, it's one of the specific themes that we have as Tera here and Estonia in general as well. So during recent years, we've done many deals with Japanese investors and corporates. So we are really on their radar. So I'm happy to tell you more about that. I spent quite a bit of time in Tokyo. Well, besides enjoying the nightlife, managed to build the network as well. Yeah. But I mean, yeah, back to your question, the COVID situation. Yeah, many LPs have just paused. They said, yeah, let's see where this leads to, and yeah, clearly some of them have now refocused on their existing investments and stuff like that. So it's that side definitely is not positive.
So I'm glad you opened the Japanese part. I'm a huge advocate in going to the opposite directions, where it's allowed, or where it's more convenient to do the opposite way. So I went to San Francisco. I lived there for 3 years, but before that, I went East and Middle East. So instead of going from Europe to San Francisco, I went to Middle East and then turned around and went to San Francisco. And I've seen a lot of the investors and startups that are native in my country, or where I was in Middle East. They are super local focused or regional focused. They don't, or if they think about going global, which I'm a huge advocate of, they immediately start going to US or to Europe or more established markets, where I keep telling them, is that the right market? Is there another market you can capture? Is there a different competitive advantage you can build in Middle East or in Far East, which is partially, Japan is a completely different story, but you build those relationships with Japan. Is there a particular reason, or is it just for the culture, the sector specific focus, or appetite focus? What was the driving force behind that?
So, well, I agree with you. The US is a more proven direction, and we started with that as well, and that's actually our main target market still. So luckily, yeah, we had sort of early success already 10 years ago when one of my portfolio companies, GrabCAD, raised from East Coast investors, and we learned from that quite a bit, and have helped other portfolio companies to do the same thing. And yeah, in our current fund, the 2 first investments, they also sort of immediately after our investments, they raised from the US. And, this really works for us. We also have a full-time venture partner in Los Angeles, and the second destination for us was actually London. And yeah, we have several portfolio companies there as well. But the Japanese angle, I think it's like from both sides interesting. Yeah, the Japanese investors, Japanese companies, they just don't help to go to Japan. They usually cover a large part of Asia as well. So obviously, I mean, that is interesting, and it's sort of an untapped opportunity in this early stage here in Europe, and yeah, we've really experienced this interest they have. The point they are making is that it's an interesting quote actually. One of the largest Japanese corporations, they sent one of their investment professionals to live here in Tallinn, and this was last summer. I asked him that, well, I understand you're chasing a few deals here, but why would you cover Europe from Estonia? And he said, no, we're not here just to do a few deals. We are here to really understand how this digital society of yours works. We believe that Estonia lives in the future. So, and I mean, I thought, okay, this sounds like a spin, but well, it's coming from a Japanese corporation, right? So, so it's yeah. And yeah, from certain perspectives, that is actually true, and yeah, and yeah, obviously we're interested to tell about our experiences and well, do joint deals and stuff like that. So we're well geared towards that.
Yeah, I think it kind of ties back to the culture side, where culture will play a huge role in what will happen, how nations will adapt, and how the startup ecosystems will adapt in different times. And clearly, Estonia had been leading in terms of digital citizenship, e-residency, digital currencies. It's been playing into its advantage of being new and fresh and that could jump into, like, the advantage of being small and move faster, much like a startup. And I think if nobody has written the second Startup Nation book, the first one was the Israeli one, I think somebody should write the second Startup Nation in the 2000s will be Estonia, or the culture that's it's trying to breed, which is helpful in kind of giving people that new things can happen in the government level, new innovation can happen in the financial world, new innovation can happen in the citizenship world. But is that so? I mean, is this going to continue, do you think, when borders are closing, countries are shutting off, not just because of the virus, but because of nationalistic policies? The idea of Europe is being discussed. How do you see this playing along in the startup ecosystems and the investment ecosystems, actually?
So yeah, we early on decided that let's be purely digital, and the other point has been that, well, not just digitize things, but really like after some years throw away the legacy product and we'll think what's the next disruption can be. And yeah, this Skype role model here was the beginning of it, and well, the success of Skype actually happened like more than 15 years ago. So it's we've obviously iterated beyond that, and well, 3 more unicorns beyond that, and well, the base is much wider here. So and yeah, from this startup perspective, this at least the longer term effects of this crisis are mostly very positive. So it's well, individual for each startup. Obviously, the well, one of the perhaps currently painful aspects, which in longer term might be a good thing as well. So we've had this long investment boom, and certainly, well, some resource, meaning some people were working for, well, not the best companies, right? So they are now relocated. So and will found new companies, and yeah, this we are really excited in the sense that yeah, this early stage venture is essentially counter-cyclical. So yeah, some of the best companies are founded at those difficult times, and well, valuations are more reasonable and stuff like that. And obviously, in our current fund, we have quite a bit of dry powder, so we are really excited about that as well. Yeah.
I think not many people understand that VCs are a 10-year, 7 to 10-year game. So if a VC has already fundraised, they have to deploy the money. There's not like, oh, I'll wait for 2 years and see what happens. This is the beautiful part of the VC if you already fundraised. And if you're a startup, that's also good, because if you are starting, you don't have any legacy to try to fix and turn into digital, not just digitize, but turn into digital. I completely agree with that sentiment. So it all depends on markets. If there's enough consumer demand, there will be startups going after that consumer demand or B2 enterprise demand. One thing we discussed in other webinars was that I would like to take your opinion on is, do you think it's easier to build a B2C company in this time, or B2 enterprise or B2 SME company, where sales cycle are a lot different now? Consumers are a little bit stuck at home and they're used to buying more digital stuff, but they might not have all the disposable income. So where do you see opportunities from the startup perspective?
Again, there are those obvious ones like companies that will enable those online conferences and hybrid conferences in few months, hopefully. And it's actually difficult to have like this general opinion which is easier, B2B or B2C. So it really depends on the particular startup here. So it's like sorry, it's difficult to answer that question.
Yeah, no, from your portfolio, I'm sure you had many meetings with your portfolio companies. From their perspective, have they seen it easier to close deals in the B2B environment? Or have they seen nobody's answering our emails, we're going back to the product, nobody's able to make calls to buy a $10,000, $20,000 product, so we'll use this time not in sales, but in product development? I mean, if you heard those comments, maybe that will be helpful.
Yeah, I mean, well, sure. Some of the B2B companies have seen some revenue hit during recent months, and actually, if you just look into our own portfolio companies, and those B2C companies have not seen that really yet. So, but it's our sample obviously is too small, so to draw any conclusions from. So, yeah.
So I have a quote that I like to read, which is really great. How were you able to get into CERN and convince Mike to leave it and build a company? Which is a great quote. I mean, I'm really proud of what my vice founders told me about. Like when I read that, I felt like I wish this was me. Like Andrus found us as an idea working in CERN. We had no idea what a startup is, what entrepreneurship is. He helped us navigate this world, and we're eternally grateful. I think this is a really good creation that you should be proud of. Would you want to talk about how that story evolved?
Well, this Estonian ecosystem, we've built many things over the years. So one of these things is called Prototron, which is a private grant program, and it works very simply. So it's like a 7-minute pitch, 7-minute Q&A, and essentially like next day you will know if you got the grant or not. So I picked up Mait and Ott from that program, and at the time I think they didn't have the company yet. But yeah, I mean, if you in those early days, if you are able to show them next steps towards building such globally disruptive companies, I mean, then for the founders, it's much easier to really have this ambition and believe in themselves that they can do this.
Yeah, but it's really hard to convince scientists if you don't have a PhD on anything. How did you manage to like turn that mind into the startup side? Because they're usually super reserved, super introvert. What were the tricks that you used on them, like a magic mind trick on research-based startups?
So, I mean, I agree with that. Don't have PhD aspect of things. I've actually flunked out of 2 different universities while doing a PhD, and I was studying economics and finance, and actually I was supposed to write a thesis in behavioral finance. So looking back, this is well, very useful for me in this VC world. So it's like, well, I guess in Mike's eyes is well, flunking out of PhD course. Well, this is maybe a little bit of credibility already.
Absolutely.
But I mean, yeah, I think the in this current world, the startups are really popular as well. So people are curious, and well, this helps certainly. Yeah. So.
No, I mean, I got my answer. I think that was a good icebreaker, saying, "I dare to quit my PhD, and I'll teach you how to do it." So that could be.
Actually, that's how I did it. Yeah, I decided to not do the thesis and reviewed different technologies around my original alma mater, Tartu University, and well, picked one out of university lab and commercialized that for 6 years. Yeah, this was mostly all blood, sweat, and tears. And but I mean, it's like a really cool, hardcore new technology. So this guy's product is being used on International Space Station, for instance.
Nice. I mean, the difference between you and me would be I went to CERN and I got this T-shirt. Yours will be I went to CERN and I picked a winner startup that went global. That will be $1 billion company.
Yeah. Sure.
That's a good way to hunt startups. I worked in university environments, and most of the time, anytime I felt I'm an idiot, I felt like, okay, I'm learning something. So in order to fight that feeling, I dropped out of an environmental sciences master's program, but I learned tons about crap, which was like waste management, waste technologies. So I see the angle. The curiosity is really important. And
I think there is a saying that you have a choice in life. Either you're bored or you feel like an idiot all the time. Meaning that, are you going for new stuff or not? Yeah, so.
Yeah, I completely agree. I mean, I also have a 10-year-old daughter, so I had to be super knowledgeable about Roblox, Minecraft, and everything else. So that also helps. From that angle, actually, if like you invest in small ticket sizes, 200,000 to 1.5, and there's an argument that says there will be a lot more investors waiting for a Series A, and to see the team being de-risked, market being de-risked, product development being de-risked, and there's not so much upside in making so early bets. And there's an argument. This is more like an argument against accelerators, where they get very early, they don't have follow-on funding too much, and soon enough some of the accelerators will die, especially now since they can't fundraise quickly. How do you see the role of accelerators and seed stage funds like yourselves play along within the slide?
So my
you were
feeling,
also Rise guys, you had that experience as well.
Yeah, absolutely. Yeah. I mean, the best seed funds, the best accelerators will survive and be more successful because of this. The feeling a few months ago was that, well, things were a little bit too hot, perhaps. Yeah. And it does feel better now. So, but as said, I mean, the quality will win, and then best ones will survive. So I mean, obviously there is this luck component in things. Yeah, I mean, if a mediocre team raised money just before the crisis, and this best team is failing to raise now, that's suboptimal. Yeah, but
from a ticket size perspective, do you imagine, because you have a 200,000, 1.5 million kind of range as far as I read, do you imagine you'll invest more in the 200,000 euro side or more in the 1.5 or plus 1 million side?
So as we are now doing this second close, our ticket sizes will increase for that reason a bit more as well. So depending on deals as well, but obviously what we've seen is that the effect of the situation is that rounds are smaller and valuations are lower. So it's from that perspective, tickets can be smaller. So, but we're not so much concerned about this crisis situation. If you're in this early stage, you should be looking for many years ahead, not just a few months, right? So, and we obviously we are this high conviction, hands-on investors, so we really aim for this longer term perspective.
Yeah. One perspective that we had from other participants and other startups was the angel activity has already and will continue to be really restricted, and that will create a gap, which was previously, it was easy to raise a seed round and then easier to raise a Series A, but it gets difficult when you go from A to B. But now a lot of the startups that we talked is like, we can't even reach to angels that we started conversations with. Seed accelerators are not like moving forward with deadlines or with cohorts. Seed investors are waiting at least a little bit more, unless we are in a very, of course, those startups who are in the communication, healthcare, education are closing deals much quicker, but the others that are more normal, like industrial applications or IoT-based startups, they're finding it difficult to close deals because angels are not helping. Do you see that as a problem going forward in creating quality deal flow?
Yes, some of the meaningful deals might not get funded and they will just die because of that. That's definitely a problem. But as said, my own thinking a few months ago was that things were a little bit too hot. So some of those meaningless deals shouldn't have been funded. So, and from this startup fundraise point of view, so it's the exercise that they should think about is, who are the investors who recently raised new funds? Because these guys are out in the market, right? So they don't have existing portfolio. And they don't really have to deploy, as you alluded before, that they really have to invest. You can still invest slower if you want to, but yeah, those funds with dry powder, they, in this less competitive situation, they many of them, including us, we're really more actively looking for deals. Yeah.
Perfect. So here's a curveball to you, and this is maybe a good question for the startups as well. Let's say I pitched you an idea before COVID that depended on growth, that will delay unit economics or break-even point a few years. And now I get back to you and say, you know what, I'm closing that one because that's not going to grow. We're not fundraising. I'm focusing on something that's going to be break-even in 3 months, unit economics positive in day one. What would your advice be? Of course, it's very general.
If the point is that, this second strategy is there to avoid this potential funding problem, how can you argue against that, right? So I, in general, believe that founders know their business much better, so you can agree with them and invest in them, or disagree and not invest. But should you really sell your plan to them and invest then? I'm doubtful if that's the right strategy.
When we talk to a lot of the investors, the first thing they did is they kind of divided their portfolio to 3. maybe it's different with you. The ones that have 18 months runway and have some sort of a break-even point already within reach or already there. Some will reduce costs and will still survive even if they don't have like 18 months. They'll be okay in 12 months and they can cut costs and survive. Maybe they'll do a mid-round, a bridge round to lengthen that process. And some were already being played to, as you were saying, in a hot market. They were focused on growth. They had no idea how to do unit economics positive. And they now can't raise any funds because they are losing money day by day. They can't actually change their business model. With your portfolio, that you probably viewed them and seen what's their problem sets and help them build that up. And I see it's increasingly more profit-oriented, or profitability priority is going to be more important than it was before. And do you think that will last? Or VCs will say, okay, forget about profitability. Crisis is a good opportunity. We'll give you 2 million euros to burn it, become the fastest growing during COVID, and rest you'll figure it out. Of course, again, this is very sector specific. I know, but like for sake of argument.
So this profitability aspect of things from gross margin perspective, this was the issue already last year, all this WeWork situation, right? So, and actually, if you look what has happened with those publicly listed SaaS companies, reflected by the Bessemer SaaS index, for instance, I mean, they have actually recovered much better than the general stock markets. So it's people really believe that these companies can still grow and will have invested a lot. So it's I'm thinking, yes, profitability in terms of gross margin is really the key. And obviously in this early stage, I mean, we are thinking that, what can it be at scale? So we can't observe it yet, obviously, but yeah, conceptually, what can it be in this case? Yes.
So again, much like you were mentioning at the beginning of our conversation, the historians will go back into this era and say things were WeWork like before COVID, and things are now a lot different than now. It's like not WeWork, but we profit. That will be a change.
Yeah, but I mean, you need to distinguish in terms of sort of seeking profitability on the company level or net margin versus gross margin. Yeah, I mean, I'm all for growing fast and using investor money to land grab, but yeah, it needs to be at least at scale with a proper gross margin. Yeah.
So maybe one final question before Elif kicks me out. Do you think it's now easier to find you? For example, have you seen an increase in emails or warm introductions that are much easier, and now people they don't have to travel, they can reach to you and schedule like you mentioned. Do you see that going to become a trend? I seen in one of the tweets saying LPs will now question why do they pay the 2% management fee, because now you don't need an office, you're not traveling it much, you're not sponsoring conferences, you're not coming to, unfortunately, to Istanbul to the conference. So what are you going to spend the old management fee money on? So you gotta be spending somewhere.
Yeah, but I mean, think from the other perspective. I mean, you can use this same management fee and provide more value. I mean, obviously, we're not just paying it out to ourselves; we're using it to help our portfolio companies. So why not think this way? And indeed, I mean, this productivity gain, you can just fit like. I mean, if I really want to, in my most productive days, I can have double the number of meetings in this setting. Yeah, so this helps. Yeah.
it's a good way. Like instead of paying for rent, you can pay for market research. You can pay for advisors in different sectors. You can help founders do better product development. So there are many things, and like that I agree with. But I also hope you'll start traveling soon, and we'll see you in Istanbul. And I think that's about it that I have. It's been a pleasure to have you, and thanks for your questions and answers and comments.
We've seen quite a bit of Turkish founders in our region already during the last few years, and well, you're most welcome. Well, I think we're still not open towards Turkey, but well, it should happen soon. Yeah. So.
Well, I'll send you 2 startups anyways right after this. So.
Well, Andrus, actually, before finishing the interview, actually, I would like to ask you some questions about the new fund, some general asking questions by startups. So they are probably curious about the what kind of startups are you looking for to invest in, and do you have any specific geographic location or verticals that you look for? Could you just give us some more detail about that?
Sure. So home market is Estonia, but we also invest in Scandinavia, rest of Baltics, Poland, Czech Republic. We are sort of proudly generalist, meaning that we think that we should focus really, like explore every opportunity there is, and we've been successful with that. Yeah, we've invested in many verticals. Have meaningful bets like that, and of course we like some things more than others. We've been investing in this AI machine learning for more than a decade, and the other bit is that, well, as we're hands-on and as some of our portfolio companies mature, we get to learn about their respective industries. And well, we like fintech for that reason, and well, last mile delivery, automation, stuff like that. So yeah, whenever we have a mature portfolio company, we understand that industry more as well. Yes.
And how do you reach your deal flow? I mean, do you prefer to have like warm introductions, referrals, or startups can just reach you through the emails? What do you recommend startups about this?
I mean, any channel works, but of course, warm intros are useful. So yeah, this the number of startups have increased quite a bit, and yeah, to get attention or to sell about the special source, it makes it easier if there is a warm intro, but that's not the only things that can convince us that you're cool.
And my last question is, do you have any red flags when you meet a startup team, for example, in a meeting, in the first meeting or the following ones? What makes you stop actually to continue the deal?
One of the most influential founder meetings for me was I think 5 years ago in New York, and like the first impression of the CEO was that, well, there is something physically wrong with the dude. and actually and then he got to tell his story how he raised a new round in 1 week after writing slide deck during the weekend, and so he was actually sort of experiencing this hyper growth cycle or period. So yeah, it felt like his nerves were not underneath the skin, but like on top of the skin, just like. So and the learning point from that was that the first reaction to his behavior was that, well, it felt like a red flag, but actually this was one of the one of the most interesting founders I've met, and he has had now a really successful exit and stuff like that. So,
Wow.
so yeah, red flags can be biases.
Yeah, I hope he's feeling much better now physically.
Probably. Do you have any advice for startups actually for these Corona days and to survive these pandemic days process actually and to survive?
I mean, well, the easy one is that, and obvious and the simplistic one is that, focus on things that will matter more. Or, few of my portfolio companies have really capitalized on this current situation. So it's like new opportunities really can arise from this situation, and I think in that perspective, I mean, that's sort of general agility of any startup anyways, right? So yeah, but I mean it's easy to be in this arrogant position, right? So usually real world situations are not that much tougher.
Yeah, you're sitting on almost 50 million euros cash. You can do that.
Okay, thank you, Andrus. Ozan, do you have any other question before?
No, I'm planning to surprise Andrus with like 2 different startups that are solving ice issues, actually, which is funny, from Turkey solving ice issues. But regardless, I agree that there are lots of Turkish startups that we push to go global many years now. For the last 2 years, we have seen a lot of Turkish startups looking into global success. And because Estonia is the closest one, it's easier to set up a company, it's easier to get the residency. I've seen a lot more startups getting their European headquarters in Estonia, and that became one of the advices I also give. And thanks to people like you, I think the startup ecosystem will have a more regional perspective through the guidance you give, the support you give, and the funding you give. So thanks for the hard work. We'll hope we'll keep in touch and see more startups getting global through the region.
Cool. Thank you. Thank you very much.
Thank you very much, Andrus, and thank you, Ozan, for this great interview. We hope to see you back in Istanbul. Have a nice day.
Thank you, Andrus.
Enjoy the summer as well. Yeah. Cheers.
Bye bye.
You too.